Coronavirus impact on real estate investing. So whether you already are invested in real estate or you're thinking about it, you need to watch this video because the impacts have already been gigantic and they're growing even more rapidly. Impact number one, and arguably the most significant, all-time low interest rates in recorded history, which again started in 1971, Fannie and Freddie. This means that the interest rates right now are lower than they were during the bottom of the Great Recession. That's a huge impact, and it's really good for you as a real estate investor. Why? Well, first and foremost, it's a great time to refinance. If you haven't refinanced in a while, now's the time to do it. You're going to get about as low of an interest rate now as you'll ever get in your entire lifetime, which means you get to cash flow more. It's better for you as an investor. You're paying less in interest. All right, but there's more to it as well. If you're a house flipper like me, and like many of the people that I mentor, it's also a great time to be flipping. And the reason is because it makes houses slightly more affordable. And as a real estate investor, you know what can happen. You put a little bit more in the house than you wanted to, and so you have to sell it for slightly more than you originally planned. And depending on competition and comps, you might be struggling a little bit to sell. Well, right now, because of this drop in interest rates, it's going to get it a little bit easier for you to sell. So, all-time low interest rates, huge impact thanks to the coronavirus, and this particular impact is really, really, really good for you. The second impact, and you're seeing this if you're watching the stock market right now, is that money is pouring into safety. And that's part of the reasons why the interest rates have dropped, is because so many treasury bonds have been purchased by equity investors. And so when money is moving into safety, it means it's also moving into real estate. So there are two examples that can help you. The first would be this. If you've got a long-term hold investment that's never performed very well, now would be a good time to sell it, because a lot of investors, there's different ways to define an investor, but you have these retail investors that might be moving away from equities, moving away from the stock market, and they might want to buy real estate. And so now would be a good time to, what I would say, sell your underperformers, right? The ones that did not do what you were hoping they would do. Now would be the time to do that. Now also, when you have a situation where money is pouring into safety, now is a good time to raise private money. This is going to be the time where you want to try to pick up funding for deals that's probably slightly less than what a hard money lender is going to charge. So there's a lot of competition for hard money. I have a great video on the fundamentals of hard money lending that you need to know about when you go towards getting hard money. But now would be a time when you might be able to skip over that. Go straight to some private money, money that's coming out of equities and going into safety. The safety of real estate deals, the safety of what's happening right now in the real estate market, which is a whole lot of good things, and people know that. So this is another big impact. Money's pouring away from equities and pouring into safety, and you, as a real estate investor, you're into safety. But wait, there's more! Number three, reduced access to materials. Some material providers coming out of China and other areas, there's reductions in their ability to get this stuff out. And so that is going to be hindering builders. And see, builders are already being slowed down. And that slowdown is for a lot of different reasons. I have a great video, interestingly enough, I put together in 2016 on now's the best time in the last 40 years to be investing in real estate. And what's so interesting about that video from 4 years ago is it's more true now than it was 4 years ago. Everything I share in there is so applicable to right now. But slowing down builders is only helping us as real estate investors. It's helping us because it's lowering the amount of available inventory. And understanding inventory is a separate video I have called 3 Factors to Understand Your Local Real Estate Market. That's another phenomenal video that you definitely need to watch. And so if the inventory levels continue to drop, which, by the way, the latest article I read is nationally we're at our lowest level of inventory in recorded history, but that record of inventories is not very long. It's only like 20 years they've been recording this. So when we have these low inventories, what it does is it allows us to flip our properties a lot faster. It allows us to have multiple offer situations because there's not a lot of competition. But there's more to it. Low inventories, and I'm talking specifically about single-family homes. Low inventories also are good for long-term rental investors because people need a place to live. That's what we love so much about being residential real estate investors. And so if the inventories are low, they need a place to live, they're going to go into other rentals. And so it also means that your rentals stay occupied a lot faster and a lot more efficiently. So it's a wonderful thing on so many levels. If you're a real estate agent, by the way, you probably don't like these times. You don't like low inventories because you want more and more listings. You want more and more deals for buyers to buy. But as a real estate investor, the lower the inventories makes it easier for us to flip our properties at full price, and it allows us to get our vacancies filled a lot faster. So we love low inventories. But there's a little bit of a catch to the inventory thing I want to explain real quick. So inventories are incredibly low at certain price points. I'm going to make a little graph here. So we're gonna call this side, we're gonna call this the price of the property, and then we're gonna call this the inventory level. And what we're seeing is this: as the price is very down here, is low, is affordable, there's very low inventory. But as you get the price to go up, inventory levels start to skyrocket. You start talking about, you know, let's say it depends on the area, it depends on the median, but if this is the median line, you start getting well above the median price point of a house, and all of a sudden the inventory shoot up. So as a real estate investor, I'm talking about you focusing on affordable, lower price point houses to either flip or rent. That's where the game is being played in a big way right now. That's why there are large organizations that are spending billions of dollars to pay way too much for houses. I think it's called iBuyers. I've got a video on that too, on this revolution of iBuyers. Well, they're able to survive right now because of all of these different factors that are playing so well into a real estate investor's game plan. It's really, really exciting because we have the winds at our back from every direction. It's epic. I never thought I'd even live to a situation that was this good. All right, well, we have a whole lot of positive I've shared with you. There is one negative. Impact number 4 is that there is a vacation rental slowdown coming. In fact, today, Airbnb announced that in those areas most impacted by the potential outbreak of the coronavirus, that there would be a no questions asked refund to any potential guest checking in. So regardless of what their lease said, and if they had a 60-day policy whereby they couldn't get a refund within 60 days of check-in, they can right now in those areas. So there is going to be a slowdown in the vacation rental market because less people are traveling, not just those going back and forth to China, but pretty much anywhere where you can get on an airplane. And I have most of my holdings as a vacation rental investor in Florida and Tennessee. I personally haven't seen any slowdowns or anybody saying they're not going to check in, but I expect it to be coming. Now, am I concerned about that? Well, not really, because number 1, I have huge margins in my vacation rentals. And number 2, I have a gigantic reserve. So I'm not too worried about some temporary slowdown. But you might be. You might be on razor-thin numbers, so it could be something to be concerned about, especially if you're on the West Coast or if you're in Hawaii. Those are the areas that are most likely for travelers to freak out and not want to check in. But if this is prolonged, consider the fact that at some point, some vacation rental owners, investors, they might panic. And they might be willing to sell properties much cheaper than they should. We'll see. We'll see how long this goes. But this definitely has a negative impact, and I'm going to feel it. And for those of you that are a vacation rental investor like me, you will too. So those are the 4 main impacts the coronavirus is having on real estate investing. And as you can see, the first 3 are very, very good for us. I would argue that this is the best of times right now. If you're a vacation rental owner, you may experience a temporary slowdown. Now, if you want to learn how to take full advantage of this tsunami of opportunity, at the very least, make sure you read my book, How to Be a Real Estate Investor, which I give away for free on these videos. But if you want to take it to a completely different level, consider my apprentice program, where my team and I, we mentor, we guide, we take complete beginners in some situations, and we turn them into the finest real estate investors in their respective areas, money-making machines. That's the apprentice program right there. That's where you can apply. And also, as I mentioned earlier in the video, I have a video from 2016 on why now is the best time to be flipping houses. And that video is more applicable now than ever, so make sure you watch that. All right, thanks so much for watching. I'll see you on the next video.